Yo, what's going on, guys? Bexio back, and today we've got some big news with Evergrande absolutely rallying the market, not even giving it a chance to see anything green, and we can see that in these charts right here. I mean, every single stock that I have picked out on like a watch list or things that I talked about, it is all red. Crypto's red. You can see Bitcoin having its breakdown here, uh, and I mean bouncing off this support right here. So maybe we're getting into a better position with Bitcoin. Who knows? But this video is going to be more about Evergrande and how it is absolutely running through the market. I mean the S&P 500 is really glad. Look at that gap that's from open. So in the pre-market, the S&P went from 406 down to 402 when it opened and continued collapsing. So why is Evergrande such a big deal? Why is it causing the market to really panic and just cause a sea of red in the stock market, the crypto market, almost any market you could think of? And here is this Evergrande kind of stock chart to sum everything up. You can see the past 6 months down 81.5%. It's all the way from this was almost $2, $1.90, all the way down to where it is now 35 cents a share. Absolutely crazy. A drop, a massive plummet. And obviously, this is China's second largest property developer. When you look at them, their balance sheet has $300 billion worth of debt on it, which is ridiculous. And people are freaking out about it because that is much more money than what was involved in 2008 during that financial crisis, when everything imploded. This is a lot more money than what even that was. But the biggest problem for this is real estate in China is one of the best investments that you can make, or was considered to be the best investment you can make in China. If you're going to invest in China, it would be in Chinese real estate. And that goes for the people of China as well. And they would, you would get kind of more rights. People who didn't have housing were like second class citizens in China. If you owned a house or a property in, like, say, a city somewhere, then you would be able to use public transport, all of these goods and stuff that was used in the city. You would be allowed to use it. If you didn't own a house, if you rented something, or just straight up didn't own property, then you would not be allowed to use that stuff to try to kind of incentivize people to purchase and own real estate. And that's why it's very normal for people in China to go after and try and buy real estate and buy more than one property. And because of that, you get these cities popping up, which are, Chinese ghost cities. Like, this is a city full built because people threw money at developers to build real estate because it was considered the best investment you could make. And all of these cities are ghost towns, ghost cities. There's nobody living here. It was built for no reason. Like, this is built for just no reason other than people threw money at developers to build it because of the thought process behind real estate being what everyone should be invested in. And this is all like owned by the Chinese government, not owned by the people. So it's just crazy to see like all of these ghost towns, ghost cities, that these things popped up for no reason. And I mean, you can see how that becomes a very big problem. Throwing money at developers, developers taking on debt to build cities, which then don't house anybody because people can't afford it or don't want to live there. It is a bubble that has been waiting to pop, and right now we might be seeing it start to pop. This is another Chinese property developer in Hong Kong that has collapsed 87% before it was halted. So who knows? This could have went to zero very quickly. But look at this chart. That is insane. This drop, absolute plummet. Chinese real estate starting to implode. You have this another and another one, another one, another one. So all Chinese property groups are starting to implode. And the bigger problem for this all as well, people say it might be just a China problem. You know, they have to deal with it. They're the only ones who this would affect. And that couldn't be further from the truth, because a lot of the debt that is taking on or was taken on from these companies was from other countries, and a lot from the US and Europe. So uh, a portion of people's portfolio that was supposed to be very stable, not very risky, has all of a sudden turned insanely risky and insanely unstable. And that flips people's investments upside down. So there would be this thing called commercial paper. A lot of companies take on commercial paper, secured and unsecured. And this, I would assume, would be like a secured kind of commercial paper where you would be able to have confidence in that they're not going to go bankrupt like they are right now. It's kind of like comparing like Apple. Like if you were to have Apple borrow your money, you would be very confident that they're going to be able to pay you back whenever they said they would, and however much interest or whatever they said they would do. You'd be confident that Apple would do that. Other than going to a startup and giving them money, you'd be less confident. That's like a difference between a secured and unsecured, and those kind of thoughts there. But property looking like it is going to implode in China, and then ripple effects from this going across the markets already being felt. I mean, this just absolute sea of red. So the big question here: to bail out or not to bail out? China's Evergrande dilemma. So this talks about the Evergrande stuff here. You can see they owe more than 300 billion to people. Its interest and liabilities raised $28 million per day. So the company needs to pay around 120 million as interest payments to bondholders. So a lot of people are kind of expecting China to just come in, bail out the company, and move on with their day and make sure that everything doesn't collapse, which they could, and they might just do that. It would make sense why they would do that. This would be an economic disaster for China. If they don't do that, then the ripple effects from this would be massive. Like this $300 billion number is much higher than 2008 stuff, the Lehman Brothers. There's a good chance that this shows ripple effects through the entire market, and this is why Bitcoin was created. If you are just in Bitcoin to make money, then you're thinking of it wrong. Bitcoin is created to fight and stop things like this, where it's just shady numbers going on. These things in fiat, it's just easy to print more money, throw it at the problem, try and make it disappear. All you're really doing is pushing the can down the road further. And right here is a good example of that. They just kept on taking on debt, take on debt, take on debt, pump out these numbers saying we're making so much money when they're actually just taking out a bunch of debt. And then one day the money stops coming in from debt and you no longer can pay your debts, and that just causes a big collapse. And that's where Bitcoin comes in, where you can't just make more Bitcoin, and it's transparent with what it is. You can look on the blockchain, see exactly what's happening. There is no shady business going on Bitcoin. With Bitcoin itself, you can see exactly where Bitcoin is going, address to address, all that stuff. You cannot see that with fiat currency. There's a lot of shady maneuvering that can go on behind the scenes. But we'll end this video off on some Bitcoin news. Obviously, we've sunk in quite a bit here. Not a big problem though, I don't think. This is a macro thing. This is something out of Bitcoin's control and more of a macro environment deal. And Bitcoin hanging on pretty nicely. We saw a big tumble down to 42.9, kind of rallying back up and doing its own thing. But interesting from this data is these shorts collapsing and the longs actually increasing. So what that would say is there's more interest in Bitcoin's price recovering from here than it is from Bitcoin's price being pushed down further. So from this margin data, it is looking like Bitcoin is more likely, or more than likely, to go up in price instead of down in price. At least that's what these leverage traders or futures are looking at. And that's all you can judge off from this. Short term, who knows what happens with all of this Evergrande stuff. Long term, Bitcoin wins. This is the reason Bitcoin was invented and was created and is doing what it's doing now and catching so much more adoption. So we'll see how everything goes. And this Evergrande stuff, If China bails it out, maybe just gets swept under the rug and things bounce right back as normal. But if China doesn't bail it out, lets it collapse, and those ripple effects are felt globally, then the markets, every market, stock, real estate, crypto, could short term have lots of pain. But I think things like crypto, specifically Bitcoin and probably gold, would rally first and take off first. And I think Bitcoin would rally more than gold would be able to do. So, as always, guys, don't forget to smash that like button and subscribe. We are on the road to 1,000 subscribers. See you guys in my next video.